That's what we're going to move on to now, which is reversal patterns. Reversal patterns, as I said before, are patterns that reverse the preceding trend. They don't necessarily destroy it, but they can push back against it and at least test the trend. It's basically, here is our trend, and a reversal pattern is a pattern either that sends the market back to that, to test it at least, may not test it, but it certainly sends it up against it, and sometimes breaks the trend. What sort of price action might achieve that? The classic is a multiple top or a bottom, whereby you've got a preceding trend here, and the market, all those tops are in line with each other. The multiple top is when the lows on the pullbacks on the top are broken, completed. You can have a double top, completion there. A triple top, all the highs are at the same level, completed there. Any number, multiple tops, tops and bottoms, equally on the same. At the bottom of a market, you can have one that they have to reverse at more or less the same level. And the pattern completes on the breakup through here. You do not anticipate, if the market reverses here, certainly it's support, but there is no reversal pattern in place until the market breaks this level here from there. The moment of reversal is the moment of completion. And when it completes, it's trading there. Where is the target? The minimum move. We measure this height here and extend it above the completion level. And that is the minimum move. With the top formation, with a triple top, the minimum move is this. Height extended down here. That is the minimum move. Minimum move is the minimum we are expecting, other things being equal, which of course they rarely are. We'll come again to the reality of trading these things in a practical way in a second. But these are theoretical constructs, and they are the building blocks for decision making. So the minimum expected move is that distance projected beneath the level of completion. One of the more famous and colourful reversal patterns that you will come across, and is quite frequent in some markets, incidentally, not all markets will have the same frequency of pattern as other markets. Some markets will find themselves with lots of triangles, other markets will have lots of wedges, other markets will find, you'll find if you study and analyse, you'll find lots of head and shoulders patterns. Each market will have its characteristic frequency of different sorts of patterns. The head and shoulders reversal is a famous one, which is here's the preceding trend, here is the sort of price action. It's not a triple top because these aren't the same level as this. The two shoulders, as they call them, are beneath the head. And the level, the two lows, once again, this is the critical moment which completes the head and shoulders, is called the neckline. And the minimum move is the projection of this distance beneath the level of completion down to here, which is the minimum move. So the critical characteristics of these are that the two shoulders are lower than the head. They should be similar to each other in height, but not necessarily the same. The head is the measured distance beneath there. This is the neckline. This is the moment at which the reversal is suddenly intact and driving the market against the preceding trend. There are variations on this. There are variations of the head and shoulders reversal. You might have, for example, two shoulders either side, but if there are two shoulders here, there must be two shoulders there. Symmetry matters. Either one either side of the head or two either side of the head. You can't have two and one. That is not a head and shoulders reversal. These are very reliable patterns. They're hugely important. Where might we find a gap? Why? You might find a gap there, the completion gap. And the completion gap is still a continuation pattern because it's continuing this preceding trend here. You might find when this trend is set in place a continuation gap. And here you might find a exhaustion gap. Yeah, people often say they want to some people understandably want to have a deeper level of analysis, and they want to understand the changing psychology behind these patterns. There is such a thing. I don't think it helps, but for your own satisfaction, you might wish to enter such a sort of consideration as to what's the psychology of how these arise, these patterns. And it's basically to do with the balance between greed and fear, of levels at which people got in. You can rationalize it in that way. I'm not going, actually, you know what, I'm not going to. It's so bloody complicated. It's difficult to, it's extremely complicated. There are good works on it, talking about the people that bought here, when it doesn't go any higher, are sellers here. But, you know, it won't help you as traders. I think if you just study the markets enough and think through these things, there are so many more questions of judgment and analysis you would be more usefully putting your energy into, rather than trying to understand the changing psychology of these patterns. Another reversal pattern is something called key reversals. And key reversal in bar charting terms is when the markets are trending down, a series of lower lows and lower highs, and the market opens very much lower and closes an awful lot higher and includes the previous day's trading range within it. And that is called a key reversal. If it's a day bar chart, it's a day key reversal. More importantly, if it's a weekly bar chart, it's a weekly key reversal. These are important and useful and much sought after, but you have to look back historically and find out if there's a high frequency, as there is in some foreign exchange markets, they are rather devalued in terms of their efficacy or predictive value. In other markets, weekly markets, in, for example, the treasury bond market, they're highly prized indicators. That would, in a bull market, the equivalent would be a bar that trades higher than the previous day's high, trades lower than the previous low, ends on a low, and that is good. In fact, it's nice if it opens higher than the previous day. It doesn't have to. That would be a bear key reversal.